Hello there, Mavericks. It is August 29th, 2024. Let's get into it. In this session, we are going to talk about what happened during the day. We had a little bit of economic news. We're going to go through all the commodities. We're going to go through all the sectors, and then we are going to find some trades. I've got 3 trades for you today, 2 bulls and 1 sideways.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
All right, so let's talk about how everything started off, even overnight. Last night, we got NVIDIA earnings. And their earnings came out, and there was supposed to be this big expected move in the options market. So I think it was like plus or minus $14. And when it came out, the report was pretty good. It wasn't good enough for it to break higher, but it was still pretty good, so it didn't really break lower. But it definitely was down after hours, and it kept creeping lower and lower and lower, and the futures started to follow it. And at one point, I saw that we were down 1% on the NASDAQ futures overnight. And then they bottomed out. They started to move back up throughout the night. And then in the morning, we got a revised second quarter GDP report from 2.8% up to 3%. And that helped the market move into positive territory in the futures before the market opened. And then the market opened, and we had a nice 1% gain, and then it all evaporated. By the end of the day, the S&P was flat for the day. The NASDAQ was down. At one point, the NASDAQ was down almost 1%. So really, I want to just focus here. And something we've been talking about lately, the Russell was up, the Dow was up. And if we take a look at the advanced decline line, this is a pretty solid bull day. 2 advancers for every 1 decliner. We've got almost 70% of stocks above their 50-day moving average. This was a bullish day, but if we take a look on the charts, you can see that we have this little shooting star candle right here. Now look, this is all happening in a base. So these candles and little hammers, little shooting stars, this is what you get when you get price action that isn't going up or down. You get a lot of these kind of candles in here. Don't read into this at all. Don't say that's a shooting star candle, this is bearish. It's not. It depends on where it happens. If it's happening in a base, that's just very normal candles that you see in a base. Again, like a doji, very normal candle to see in a base. It's been my premise that we base here all the way through the Labor Day holiday, and then we break higher. Now look, I'm going to show you a chart that is wildly different, but it's really the same thing. Here is the RSP. This is the equal weighted S&P 500, and you can see that we broke out to new all-time highs. Without much fanfare, the rest of the market has broken out to new all-time highs. So what is it that's holding it back? It is the large cap. Tech and NVIDIA was the story today. I mean, look how big of a chunk this is. But then we had, Microsoft barely up, Google down, Meta flat. All of these reasons that we just didn't go up today. But take a look outside of those. It is really green out there. Financials are just looking fantastic here. Healthcare, man, I can't tell you how many good looking chart setups I'm finding in both of those sectors. So it's really where we were about a month ago, where the NASDAQ, the Qs looked pretty lousy and everything else looked pretty good. And the question I posed last month was, look, either the NASDAQ is going to pull it down or the rest of the market is going to pull the NASDAQ up. And we know what happened. The NASDAQ actually pulled the rest of the market down. We're here at the same place, the same question. What is the most likely thing to happen? Is it going to be the NASDAQ is going to weaken so much that it's going to pull the rest of the market down? Or is the rest of the market so strong that it's going to move on really without the Qs? And again, the Qs will just underperform. They just won't do as good. I don't know what it is. Of course, no one knows the future. But if I had to put a bet on it, which that's literally what I do for a living, is I would bet that the rest of the market is broadening out. The economy is great, 3% GDP growth. Going into an election where there's a lot of money spent, I don't see any reason why this market doesn't break up to the upside. Now let's talk about, we are now moving into the statistically worst 6 weeks of the year. September 1st to October 15th is the worst period for the stock market, and it's been that way for the last 3 years. And every single August, I've been warning and saying, hey, everyone, we're coming up to this period, watch out. And the way everything was set up the last couple of years, it was pretty clear that we were going to get a big sell-off. I do not feel the same way this year. I think we actually have a very nice 6 weeks this year. Now remember, seasonality patterns, it's not a guarantee. Some years it can do whatever it wants. Looking at how everything is right now, I don't see a case for there being a big sell-off over the next 6 weeks. I could be totally wrong, but looking at where we are in the markets, looking at us at all-time highs on the RSP, really no fear out there. We had our freak out last month where the VIX spiked. I think it's smooth sailing from here. So I am net bullish here in this market. So it does not surprise you that I have been finding way more bulls than bears. And this is just confirmation. I don't go out saying I'm going to find 20 bulls and only 4 bears. I look out for trades. And at some point, I have so many bullish trades, I literally say, you know what, I don't need any more. I've got plenty. I'm not even going to look for any more. And then I go look for bear trades, and they're pretty tough to find. And that's where we are, and that's a confirmation of my outlook that we do go higher here. So let's take a look at some 2 bulls, and I got one sideways for you. First off, I really wanted to choose EXAS, but I've talked about that one about 2 or 3 weeks ago. That's been a very good trade for us. So I wanted to stay in the biotech sector. Well, not the biotech, but in the healthcare sector. And this is Illumina, ILMN. And you can see breakout of this about 1 month base. We broke out. We've pulled back. Really nice. Look, this isn't the greatest 2 candles I've ever seen off of a bottom, but I'm not looking for this thing to run up to 150. I'm looking at this saying, hey, you know what? I could make a trade like 130, 135. Not all that bullish. If you want to be more bullish, then 135, 140. That is going to be definitely more bullish. You can trade this however you'd like. Moving on next to Adobe. Adobe earlier in the day looked really good. You could see it got hit back down. Now look, if you want to look at this Adobe and say, you know what, I want to avoid large cap tech, I totally get that. And I would agree with that. If you want to just avoid large cap tech, look how many bulls there are. There's so many bulls to choose from. This CWAN, this COHR is in technology. It looks amazing. Newmont Mining looks amazing. BN and financials looks amazing. There's so many good looking trades. So if you say to yourself, Rob, I don't really want to mess with this Adobe. I think it could be tied in with the Qs. Okay. But I'm going to go for it. It's got a really nice setup here. And I'm not going to be all that bullish. I have to recognize there is some resistance up at 580. So this is where I think of like a 570, 575 bull call spread just for a week or two. Looks really nice here because I do think that the markets are going to be breaking out after Labor Day. And on the sideways side, Caesars. As you can see, this thing is pinned. This thing is pinned right there. 37 in the middle. I think you don't want to go up or down below that. I think 37 is your point for a butterfly. So again, 34, 37, 40 butterfly on Caesars. Let's talk about tomorrow. Tomorrow I expect to be a fairly quiet day. However, we do have the PCE price index. Now this is the Fed's, what they call their favorite inflation measure. And it's supposed to come out as plus 0.2. There's a 100% chance we get a rate cut. If this comes in at plus 0.2, no one cares. If it comes in at plus 0.1, no one cares. If it comes in at plus 0.3, okay, people might care a little bit. I think the odds of a 50 basis point cut probably go down even more. But if it comes out at like 0 or negative, that's actually too low. We don't want to see negative inflation. That's deflation. That's not a good sign. This thing has been perfect at 0.2 for the last like 8 months. I don't see any reason to think it's going to be different. I think this print comes in at 0.2. I think this market just cruises out into the Labor Day holiday with a very, very quiet close to the week. That is my opinion. We'll see what we actually get tomorrow, and then I will update everything on the trading room. Goodbye, everybody.